Thanks, Marco. Yeah, so just for 5 minutes, I'm gonna present some data so you have more context for the panel that's coming after me. So let's see if we can pull up the slides. Yeah, awesome. Great. So first, Marco asked me to create a bit of an overview of who is at the event. And we were able to identify at least 220 startups, sustainability-oriented startups and non-profit, who together have raised 19 billion in venture capital. Now, there are about 53 sustainability tech unicorns in Europe, and of which 6 are here today. And I think the point that Marco wanted to make is that you want all of them here, right?
No, that there are many unicorns.
Okay, but more to come. There's still upside.
We have the right ones here. So
yeah, exactly. So with that said, let me just give some background about where we are with venture capital and specifically sustainable venture capital. So in general, venture capital activity is kind of back to pre-pandemic levels. So here you can see quarterly investment globally. And I think this goes counter to maybe the narrative that you see on social media and in headlines. I mean, there is a severe downturn. Not denying that, but we're basically back to the way things were before. Maybe a bit worse, but it's not that dramatic. We just have to get used again to this new reality. If you then look at sustainability-focused venture capital, it is even holding up even more. So you can basically see that the decline is far less severe. And that is partially because there has been a lot of sustainability tech investors that have raised funds really dedicated on this. 5 billion has been raised already so far this year globally, of which almost 1 billion in Europe. But also a lot of generalist investors are increasingly focused on sustainability. The nice thing about Europe is that it's especially very VC or very sustainability oriented. So 18% of venture capital here goes to sustainable companies, which is far more than in the US or in Asia. And within Europe, or here I look at EMEA, including Israel, actually sustainability is taking a record share of overall VC investment. So it's now 17%, which is the highest it has ever been. So what is sustainability? Well, at Dealroom, the way we define it, so we say ESG is about kind of reducing harm. Sustainability is about actually doing good. And for us, a company qualifies as sustainable, or we call it actually impact. We use the word impact. That if you remove the impact, you remove the entire business. And then within that, you have climate tech, which is about 3/4 of impact. It's about 3/4 both by value created and by venture capital invested. So what is inside the sustainability bucket? If you talk about venture capital, it's mostly about energy, transportation, food, and health, as you might expect. But here you can kind of see the kind of the hierarchy. If you go one level deeper, so exactly, okay, energy is very broad, transportation very broad. Here you can see where that money goes to. So energy storage is the main bucket in Europe, and globally it's mostly going into vehicle production. Here you can see kind of the current kind of momentum or trend. So energy investment into energy startups is the fastest growing category in Europe. And another kind of unique characteristic of sustainability VC is that it's way more physical. So overall, in European venture capital, only 30% goes into kind of physical tech. So it means not just software, not just marketplaces, it's not just about bits, it's also about molecules. And that is only 30%, as you would expect for general VC, but in climate tech, it's 68%. And it's about 62% if you would look at all of sustainable investing. So it's much more physical. It's a very different beast. Also, climate tech is increasingly about deep tech, so they increasingly overlap. This is a slide I pulled from a report that we're about to launch together with Lakestar and Walden Catalyst. I think we'll release it in January, but you can see that now 31% of all climate tech investment is deep tech, and deep tech means really developing like a novel technology, like taking basically R&D risk, and often like there's like a science element to it. And I think that is one of the most exciting areas that people will look at a lot in the coming years. So the overlap of climate tech, deep tech, and industrial tech. So more kind of in like the overlap between software and the physical world, and making a big impact on the most polluting industries. So if you want to learn more about it, you can go to impact.dealroom.co. You can create a free account. There's a newsletter. We have all the NOAH attendees are also already mapped on there. We have over 10,000 sustainability startups mapped in detail on it. So yeah, go ahead and create a free account. And thanks for listening.
Thank you so much. So if the panelists can come on stage now, please. Thank you, Yoram. Okay. Thank you. So by the way, it's only only the speaking companies, the 19 billion, and Klarna and Takeaway and Just Eat are to be added, so to get to our 24 billion we published. Yeah, VCs. Who believes they are part of the sustainability battle? Hands up. To ask the inverse question. Well, let's start with Harley, from originally Inside, who came to NOAH in his early days of an analyst and built a career here and did a great job now having his own fund, Left Lane. Please, maybe...
I owe everything to you, Marco.
Bao-Y from Target, I'm so sorry. Welcome on stage. And we have Daria from... I think the largest sustainability fund in Europe, the World Fund, currently on the road. Risto, representing the private capital, the family offices. He runs the impact office. Ciao. And then, of course, Luca from Italy, Rancilio, who has an evergreen model. Now, I invited those funds, not because they are my favorite people. I invited those, I call them funds, or people, because they clearly know what's going on the market right now, because all of them have been fundraising. And maybe start a quick intro. We will take some questions later, so bear with us. Luca, please introduce yourself. Let's do like, I'm Luca, I do this and that.
Yeah, very short. I'm Luca, I'm from Milano. If you Google Rancilio, you will find my previous experience. Spent 25 years myself and 90 years the Rancilio family in the espresso machine market. My grandfather Roberto in the 20s invented the espresso machine. And after such a long journey, let's say a very classic, very old economy entrepreneur, in 2013 we sold the Rancilio, and I started doing some investments, let's say in the tech impact investing space, education, planting trees, and in particular we were the only Italian family that invested in Lyft in 2015 together with General Motors. So from there, some people say I exaggerated, so I put together a portfolio of 48 direct deals, but especially it was clear to me that I was not able to do what Lakestar or Seed Camp or Bessemer are doing themselves. So we also collect a portfolio of 59 funds in the same box together with the direct deals. Now, from last July, we are also a regulated entity, and other families, Italian families, can invest on top of our portfolio. I always say like Forrest Gump, running, and other people, they run with us in the same structure.
Nice. Risto.
Thank you, Marco, for having me. My name is Risto. I'm from Geneva, originally Finnish. I'm here not as raising capital VC fund, but as an investor. I represent family offices. The Impact Office is a group of buy-side single-family offices focusing on impact investing. So we want to find that measurable outcome. My background is in asset management. I was running family office-backed investment company in Geneva with listed funds in Luxembourg, long only, long short, event-driven, VC, direct, you name it, we did it. Nothing to do with anything that getting that market return. 2015, we started the Impact Office, which is solely focused on finding that elusive 360 view on having something positive with the market return. And as you know, it's very, very hard to find, but we are working hard on it.
Hopefully we helped you a little bit with that.
You will.
Daria.
Hi, I'm Daria. I'm one of the founding general partners of World Fund. As Marco said, we are aiming to become the largest European climate tech VC. We're raising 350 million to invest in transformative technologies which can contribute at scale to the decarbonization of industries. We are multi-stage, so we do early stage and early VC growth. I think here you have to distinguish between the real private equity growth. We invest in the most emitting industries, or disruption of which, around built environment, energy tech, transportation, industry, and then on the other hand side, food and ag tech. So basically the 5 areas which are contributing to the highest emissions out there. I've been in the industry for almost 20 years now as an entrepreneur, investment banker, then back entrepreneur, then VC, entrepreneur, now VC. With World Fund, measurable impact, I think it's a topic we speak later about, but we really believe that venture capital is a fantastic, this is a fantastic time to create super returns as a VC, but also use as an enablement to solve the biggest problem out there, the climate catastrophe.
Thank you. Bao-Y.
Hi, everyone. Thanks, Marco, for having me here. I'm Bao-Y. I'm an investment director at Target Global. Run a multi-fund strategy. In total, we manage about 3 billion euros asset under management. So I specifically focus on what we call our early growth investments at Target. So typically, that means I'm investing out of a 525 million vehicle, Series A, Series B stage, typically 10 to 30 million euros as an initial ticket. And then we can double down later on sort of our winners as well. Yeah, I have a special interest in ESG. I think we've done, we're not an impact fund. We're a generalist fund with specific themes. One of them that I'm personally interested in and passionate about is ESG. So it's not our sort of primary focus to only do impact or to only do ESG. It's one of the core verticals we're interested in. And in the past, we've invested into companies that have impact angles as a secondary angle. So for example, I've invested into Crisp, which is an online grocery player out of the Netherlands. So reducing food waste. We've done things in the energy efficiency and property space. We've made an investment into diversity recruitment, so more the social within ESG. So those are secondary, features of companies that we've invested in, and it's something I'd love to do more of as well.
Wonderful, thank you. Harley.
It's really good to be back here. The first time I came to NOAH was in summer or fall of 2010 in London, and so it's been well over a decade. I guess I'm one of your true loyalists. I'm Harley Miller. I'm the managing partner and CEO of Left Lane Capital, based in New York. Prior to that, as Marco suggested, I was at Insight Partners for about 10 years, largely leading the internet and consumer tech investing, which bent a bit earlier stage within a otherwise large, more enterprise software-focused firm. And together with my now partners that was running that exercise and initiative with me, and think about companies like the Delivery Heroes, the HelloFreshes of the world, We spun out to form Left Lane in 2019, which is a internet and consumer technology dedicated fund. And so in a world of more generalist investors or overwhelmingly kind of true enterprise software investors, we sought to carve out our lane, no pun intended, around the internet and consumer technology space. So we're investing out of our second fund, which is a $1.4 billion fund. We're headquartered, as I mentioned, in Brooklyn. We have also a satellite presence in London. About a third or more of our portfolio is based here in Europe. So think of companies like Choco, where I sit on the board, or Go Student, where I'll be on stage with Felix, the founder, later today. And yeah, really looking forward to the discussion today.
Well, and I'm very happy you came, because I told you
Fresh
sustainability
off the
is
red
the
eye
new
right now.
digital. We have kind of two impact people, if I may say so, sitting in the middle. And then with Target, who's done quite a lot of work in sustainability. Harley is converting. And of course, Luca, as being in all these funds and having the biggest market view. I'd like to ask you a few questions, since you have been recently on the road. Is sustainability a topic which you can ignore as a fund today? When you go on the roads, maybe we're starting in Italy. Luca, are you being asked by the investors if you look after sustainability, or is it more like how you make more money for me?
Well, Italy is the country where there are post-philanthropic approach to everything.
Okay.
So it's not that easy to define something that is good in many sense without falling down in the philanthropy area. But of course, even a discussion there is raising, and the impact space, people are looking for new opportunities in the impact space. I also can see that with the new generation coming on stage, it's very clear that this kind of consumer, they want to.
I mean, they're talking about the young generation for a while. Me as a sustainability conference organizer, guess how many approaches from young people I have to come to the conference? None, right? Yeah. I think in the end, everyone is quite comfortable with their own life. Maybe Daria, you have been, how many investors have you and your colleagues seen? Probably 500 or 200, I don't know. I hope you ask them also questions like they ask you questions. Have they been waiting for the World Fund to crack the topic of sustainability?
Sure. No, I think, yes, we've seen a lot. So we've been on the road for 1.5 years now. We're 2/3 into
Which country, what country is like the most generous with you? Is it in the Nordic region? Not so much in Italy here?
Look, I think we kind of, as a German-based firm, of course, most of our investors have some German origin. So we had this, you know, when you're a first-time fund and you go out in the street and you say like, okay, we're going to raise 350 million to invest in tech to save the world. I'm generalizing. Everyone said like, are you crazy, right? So that's why our, and maybe we should be crazy a little bit in order to change some paradigm in our industry. But what we did first, we went out to our entrepreneurial network, as my partners and myself been in the industry for quite a while. We raised a lot of entrepreneurial capital, which trusted us, and that was very kind of positive. And now we're mostly focused on bigger family offices, institutional capital. EIF is on board from, I think it's not yet announced, so don't quote me on that, but they are. And we do see a very strong interest from institutionals in the bigger funds, because they all actually got the mandate to invest. And basically, given their fund models, they have to invest more, but they can't invest at the kind of to have a higher percentage number of funds. So there is this without any interest, but this is a great sweet spot for us to get in. And then I think everybody in the last at least 2.5 years understood that it's not only about the trend, and it's also not about nice to have, but we are actually in a deep sheet.
Well, when we started NOAH, there were 1,000 institutional investors. This was 2009. Around 300 digital companies worth more than 100 million. Now the 1,000 investors grew to 7,000 investors. So differentiation on the road when you are raising capital is probably becoming more important than ever. Do you think, Bao-Y, that the investors, the LPs, are having, like, this is my sustainability basket, this is my normal growth capital funds, or is it like one LP goes after sustainability topic? Is it mixed? Does somebody know?
I mean, so I obviously can't speak, for all of them, but this is sort of just my, educated guess in a way, right? I mean, I would believe, and I think, all of us are finding sort of the overlap of this business model works, right? And it has a sustainability angle. And I would believe that LPs would think about it in a similar way, right? Just because it's sustainability doesn't mean that they have different return requirements, right? Or that they would have different, fund life cycles in mind or so on, right? I think when we spoke about it in this group, we all have sort of funds that are set up in a similar way with similar return requirements and so on. So I think it's coming, still with the same requirements of, I want you to generate, these type of returns, but I also want, you to find a sustainability angle to it, right? Or something that contributes to sustainability. So everybody's looking for this overlap. And truthfully, it's difficult, right? The ecosystem is relatively early in there, but that's how we look at it, and I believe that's how the LPs would look at it as well. I don't think they're thinking of it as mutually exclusive.
So they're trying to get exposure to both universe. One question, which is not on the list, but I think it's an important one. A lot of people ask, since there are 7,000 investors and now the 300 companies became like, at some point, several thousands, now the market has adjusted, but how should entrepreneurs reach out to you for capital raisings? Rumor has it, if you don't get a warm intro from a portfolio, don't even bother. Have you taken unsolicited calls from entrepreneurs? What is the best way? Maybe Harley, you are an expert in, like, especially the growth capital and the smartest investors. When you get like a cold call, is it boring for you, or you look exactly what's in the paper?
We always look. I mean, I think you can't take any conversation or meeting for granted, right? Not everyone is well plugged in or has a buzzy institutional early stage investor that can shepherd them around to growth stage, investors. So I think we are obliged and inclined to always take that call, take that meeting, scan the email, and if it's not a fit for us, we'll always respond.
But have you done a deal this way?
Yeah, we have surprisingly more than once in our tenure. Chances have it, though, given how focused we are on outbound sourcing, we speak with almost 1,000 unique companies, per month across our practice, and so we cover a lot of ground, and we try to make intros, and our network begets more network. And so again, if something's not a fit for us, we'll try to pass it along to a fund that maybe has a more specific discipline or domain authority, or it's earlier stage, or it's later stage, or it's in a sort of a different geography where we maybe don't focus. And so to the extent we can be contributory across our network, we're not philanthropists, right? I think everyone values their time, and time is scarce. But we'll always pay it forward, respond in kind, give our suggestion, give our advice. So the long-winded way of saying, yes, we have done deals from unsolicited outreach or emails.
Risto, on the family office side, right? I mean, I try to get family offices to the NOAH conference since I opened my eyes. Is this sustainability movement also being driven by family offices? We have quite a few here, luckily, also with your help. But is that something where they say, well, wait a minute, in the end, we are the driving force, we are the families with ownership, with capital, we have a responsibility. Do you see that? You clearly stepped up to your game.
Well, first of all, family offices are like flavors of ice cream. There's no one family office. It's a huge growing industry. Now 7,000 family offices with 7 trillion of capital to deploy. And there's a subsegment of who's really focused on impact and wants to write their worldview with their investments. And there we are in a space of looking for that measurable impact and the market return. But it is really, really hard to find. And if you're looking for that type of investor, my hint for you is, as a VC fund, for example, you have to do the basics right. So for us, for example, linking your carry to the thing that you promise. If it's a promise of a KPI of impact, we want to see that. And just a year ago, exactly a year ago, this time we were in a similar conference in Helsinki and met with fantastic VC funds, some of them in impact space, great track record, and then you ask, you promise this beautiful dashboard of impact, is it linked to your Christmas bonuses? All said no. And we asking why, and they say, well, nobody ever asked. So now we are here. We are asking, we're looking for those VCs who are stepping up also their game and linking their incentives aligned with the investors as well. So market return is something we are looking for, but it also has to be incentivized on the impact side too.
I always hear measurability and transparency, but when I speak to the NOAH speakers who collect this data in the Data Alliance, and I ask them, how many calls do you have per week on people asking how you collect your data? None. How many you get per month? None. Per year? None. So the people who complain about the lack of measurability do a great job in complaining, but no one tries, or very few, try to bring that measurability. How can we get these standards? I think they are talking for a long time to include biodiversity data and financial disclosure. But these seem to be mostly intellectual discussion. Is that something, Daria, biodiversity data your fund has looked into? Do we have biodiversity data in day-to-day decision-making processes these days?
Well, I think biodiversity is a great threat. You know, losing the biodiversity is a great threat, but it's just one topic. So what we do, we actually only invest in technology which has a potential to save at least 100 megaton per year by 2040. 100 megaton per year equals 20 million solar panels, or 1/8 of annual emissions of Germany, so it's quite high. And to be able to measure that, together with our scientific board and industry partners, we're actually developing a methodology where we do it proactively as a part of our thesis, as we're a thesis-driven fund, but then during our commercial DD, we have a proper climate performance assessment. And this is like the core driver of our investments. But again, because we always talk about they're different, and then there is ESG, right? ESG, everyone talks about ESG, but this is operational framework for how to drive your company. For me, it's not a framework how to do investments in general, but we do measure that on the portfolio level, right? But on the potential, how to say, okay, what is the transformative technology? This is our first step, right? 100 megaton CPP, yes, no, and then we see it as a financial KPI. We talk a lot about what returns do you expect from a climate tech fund as an investor? Super returns, right? Because we're solving the biggest fucking problem out there. And if you solve that, you are going to be ideally going to create super returns for your investors. So for us, it's it's financially connected. And this data we take very seriously, yes.
Thank you. Let's ask a question on the market. Luca, you probably got the most business plans on your desk because you invested in so many companies and so many funds. Has the quality deal flow declined? Do you see less interesting deals, or the other way around? Because the market is so bad, you get even more proposals on the table.
I feel like everyone was paused for 6 months waiting for what to expect. But as everyone says, let's say, in a moment of depression, everything can be also a success. So my feeling is that immediately now, everything is starting again. Everyone is saying also that next year, by the end of the year, the market, maybe some possibility will be open again. So in my personal experience, my personal strategy, this is the moment to invest. This is the moment to accelerate in tech.
The crisis is here to stay.
Yeah, I totally agree.
We have to get ready. How many deals you do per year? Harley?
We probably average doing 15 deals per year, so we're pretty active. We've done more than that this year, and we've been open for business throughout the summer, and I think you have to play the game on the field if you have capital to deploy. You have to be a bit smarter. You have to look a little bit harder. The universe of companies, of good companies that we're proactively raising or are proactively raising are inherently smaller right now.
The two biggest funds, Tiger and SoftBank, are not that active anymore. Apparently,
Well,
they were, despite their size, a little bit too generous.
the vacation was over, right? You know, if you're a tourist, at some point you have to go home.
How many deals does Target go?
So from our growth fund, we do about, so if I average the last 2 years, we've done about 8, 9 deals per year from the growth fund. From the early stage fund, they'll probably do, 2 or 3 times the number of that. So they're kind of doing the seed and A stage and so on, and obviously higher velocity there. So in total, probably about 20, 30 deals or so per year across early stage and growth.
So we had 35. Daria?
Look, we're still funding, so we're a little bit tight on and cautious on the deal-making side. But we plan to have 35 companies in total, so it would make it like 8 on average a year. So far, we just closed our 10th deal.
42. Risto, your families?
So we have a core group of 10 large single-family offices, and it's in, let's say, 40, 50 deals per year, I would say.
Wow. Get almost all the NOAH speakers funded here.
Around 15 funds per year.
Okay. I think that was a very good overview.
Thank you.
The kind of dilemma between sustainability and IRR. It's a mix, right? And I think I wish you the best of fundraising. And Luca is open for business. World Fund is open for business. The others, I think, are pretty much smooth sailing at the moment. When are you fundraising again, Harley?
Hopefully not for a while. No, I think it's incumbent upon us to stretch this fund. Our first fund didn't last longer than 18 months, which in that environment was not particularly fast, but in the history of the asset class is pretty darn fast. And so I think we'll try to make this vintage last, a good bit longer.
Okay. Wonderful. Thank you so much. Have a great conference.
Thank you.